With the recent volatility in the stock market, many people are beginning to wonder if a recession is on the horizon. In August 2024, the stock market took a significant hit, raising concerns about the overall health of the economy. For many, the term recession brings to mind fears of job loss, shrinking savings, and financial instability. But while the prospect of a recession can be daunting, there are steps you can take to prepare your finances and protect yourself from the worst outcomes. In today's video, we'll discuss why a recession might be coming and practical strategies you can implement today to safeguard your financial future. Why a recession might be coming. Several factors are currently contributing to the fear of an impending recession. First, the recent stock market crash has shaken investor confidence. The sharp decline in stock prices in August 2024 was triggered by a combination of weak economic data and global geopolitical tensions. For instance, a disappointing U.S. jobs report highlighted slower than expected job growth, while rising tensions in international trade created uncertainty in global markets. Another major factor is the reduction in money supply. The Federal Reserve has been raising interest rates to combat inflation, making borrowing more expensive. According to the Federal Reserve, higher interest rates are intended to cool down an overheated economy, but they also reduce the amount of money circulating in the economy, which can slow down growth and potentially trigger a recession. Rising energy prices are another concern. The price of oil has surged due to geopolitical tensions, particularly in the Middle East. Higher energy costs increase expenses for both businesses and consumers, leading to reduced spending and slower economic growth. According to the U.S. Energy Information Administration, EIA, the average price of gasoline has risen by over 15% in the past year, putting additional strain on household budgets. Moreover, the global economy is also feeling the effects of rising geopolitical tensions. Trade conflicts, such as those between the U.S. and China, and ongoing political instability in various regions are contributing to economic uncertainty. This uncertainty has led to decreased investment and consumer spending, further exacerbating economic challenges. While the possibility of a recession is concerning, there are steps you can take to prepare your finances and reduce your risk. Here are some practical strategies to help you weather the storm. Number 1, build an emergency fund. One of the most important steps you can take is to build or strengthen your emergency fund. According to a report by the Federal Reserve, 40% of Americans would struggle to cover a $400 emergency expense. An emergency fund is a savings account specifically set aside to cover unexpected expenses, such as medical bills, car repairs, or job loss. During a recession, having a financial cushion can provide peace of mind and prevent you from going into debt to cover essential expenses. Aim to save at least 3 to 6 months worth of living expenses in your emergency fund. This will give you enough time to find a new job or adjust your finances if you face a sudden loss of income. If you haven't started an emergency fund yet, begin by setting aside a small portion of your income each month and gradually build it up. Number 2, reduce debt. Debt can become a significant burden during a recession, especially if you lose your job or your income decreases. According to data from the Federal Reserve, the average U.S. household carries over $7,000 in credit card debt. To prepare for a potential downturn, focus on paying down high-interest debt, such as credit card balances and personal loans. Reducing your debt load will lower your monthly expenses and free up more of your income for savings and other essential needs. If possible, consider consolidating your debts to reduce your interest rates or refinancing your mortgage to secure a lower rate. The goal is to minimize your financial obligations so that you have more flexibility in your budget if your income is affected by a recession. Number 3, diversify your investments. During times of economic uncertainty, diversification becomes even more critical. Diversifying your investments means spreading your money across different asset classes, such as stocks, bonds, real estate, and cash. This strategy helps to reduce risk because different asset classes often perform differently under various economic conditions. Given the current stock market volatility, you might want to reassess your investment portfolio. Consider shifting some of your investments into safer options, such as bonds or cash, which tend to be more stable during a downturn. However, it's important not to make any hasty decisions based on short-term market movements. Diversification should be part of a long-term investment strategy that aligns with your financial goals. Number 4, cut unnecessary expenses. In preparation for a potential recession, it's a good idea to review your budget and cut unnecessary expenses. According to a survey by Bankrate, 28% of Americans do not have any savings, which makes it crucial to find ways to save. Look for areas where you can reduce spending, such as dining out, entertainment, or subscription services. By trimming your budget, you can free up more money to save or pay down debt. Cutting expenses also helps you live within your means, which is essential during a recession. The goal is to ensure that your essential needs, such as housing, food, and utilities, are covered, even if your income is reduced. Number 5, focus on job security. Job security is a significant concern during a recession, as companies may lay off workers to cut costs. According to data from the Bureau of Labor Statistics, the unemployment rate tends to rise during recessions, making it more difficult to find new employment. To protect yourself, focus on increasing your value to your employer. Take on additional responsibilities, improve your skills, and demonstrate your commitment to your job. The more indispensable you are, the less likely you are to be let go if your company needs to downsize. Additionally, consider exploring side hustles or freelance opportunities to diversify your income streams. Having multiple sources of income can provide a safety net if your primary job is affected by a recession. Number 6, consider safe investments. During economic downturns, certain investments are considered safer than others. For example, bonds, particularly government bonds, are generally viewed as safe havens because they provide a fixed return over time. Gold and other precious metals are also considered safe investments during periods of uncertainty, as they tend to retain value when other assets decline. Holding cash is another strategy, as it provides flexibility and security in volatile markets. According to financial experts, having cash on hand can allow you to take advantage of investment opportunities that arise during a downturn, such as buying undervalued stocks or real estate. However, it's essential to strike a balance between holding cash and maintaining investments that will grow over the long term. Number 7, stay informed and avoid panic. Finally, it's crucial to stay informed about the economy and market conditions. Follow reputable news sources, listen to expert opinions, and keep an eye on key economic indicators. However, it's equally important to avoid panic. Market fluctuations are normal, and reacting impulsively can lead to poor financial decisions. Instead, focus on your long-term financial goals and stick to your plan. Remember that recessions are temporary, and the economy will eventually recover. By staying calm and making informed decisions, you can navigate the uncertainty with confidence. While no one can predict with certainty whether a recession is imminent, the recent stock market volatility suggests that it's a possibility worth preparing for. By building an emergency fund, reducing debt, diversifying your investments, cutting unnecessary expenses, focusing on job security, considering safe investments, and staying informed, you can protect your finances and weather the storm. Taking these steps now will help you feel more secure and confident, no matter what the future holds. If you found this video helpful, be sure to like and subscribe for more tips on managing your finances in uncertain times. See you in the next one.